Welcome to this virtual panel as linked to the global conversation around the Singapore FinTech Festival here in Nairobi, Kenya. The title of today's panel is Web 3.0, the future of banking and payments in Africa. And it's within the broader context that we're thinking about sustainable innovation for an inclusive digital economy, which we're going to talk about today with my three fantastic panelists. So what I'll do is I'll introduce each one very briefly and then ask them kind of an opening question to get us started. So Jaine, I'll start with you. So Jaine Mwai is the Chief Information Officer for Standard Chartered Bank, Kenya and East Africa, and has been working in banking and technology for the last 23 years. Jaine is also passionate about driving change for gender diversity in the workplace and has achieved quite a lot at Standard Chartered, which we heard about before the panel began. But that's a topic for another panel. So Jaine, as a leading global bank, how does Standard Chartered share lessons, exchange ideas about new technology opportunities, and test new tech-enabled banking and payment products across countries and regions within your global network?
Thank you, Tamara, and hello, everyone. Being a global bank, it's inevitable that we will launch products across the group. So what usually happens is we'll launch in one country and then roll out to other countries. And if I speak specifically about Africa, I'll talk about our digital bank. We launched that in 2018 in Côte d'Ivoire and then rolled it out to other countries across the region. Obviously, we have different nuances in the different countries. So by the time it came to Kenya, we had tweaked the product quite a bit. The back engine obviously remains the same, but the features in there are different. And one of the things I must say about this particular product is that we've seen our customer profile change a lot in the last couple of years. We used to have a much older population, but now we have our average age of clients. I see Sandra laughing. Our average age of clients is about 35. So we've seen this digital uptake change a lot of our landscape. We've also seen a lot of our transactions move onto this digital space because, of course, we're dealing with digital natives. So we're dealing in a whole new world. And of course, COVID obviously accelerated quite a bit of it. From a disruptive technology point of view and how we look to the future and what happens in the future, we have launched what we call SC Ventures. And SC Ventures provides a platform and a catalyst for Standard Chartered as a bank and for other individuals that we can partner with. So we do a lot of partnerships through SC Ventures. So we get to learn about new technologies, what else is out there and what else we can do. And we use it to partner. We also run challenges within the organization where we can get our own staff to give new product ideas and things like that. So we work with what happens from a group level and what we roll out across the region and what we pick from SC Ventures that we can then roll out locally. And then obviously we can start in Kenya and roll out to other countries as well. Back to you, Tamara.
I'll go to Sitoyo Lopokoiyit next. He's the Managing Director for M-Pesa Africa and has spent more than a decade working on the M-Pesa team, rolling that out across Africa. Jaine's just talked about the country-specific context in which Standard Chartered operates. Sitoyo, as you think about the M-Pesa platform, what are those country-specific dynamics that really drive the success or the challenges that you've experienced as you've rolled out M-Pesa across multiple countries now, and also how do you expect those to change in the future?
Thanks, Tamara. And Jaine has touched on a bit of that, but I'll just touch on about four of them. And one is on digitization. So the digitization levels across the different countries makes a big difference in terms of what products and services we can offer. And we are seeing customers becoming more digitally savvy. I think Jaine has just talked about the younger generation who are digital natives. So we need to look at how to develop products and services related that are more digital. And this brings a part of our network, our telecom side of the business, which is either the 3G or 4G networks that we roll out, and the smartphone penetration across our market. So that becomes a really big a driver for what kind of products and services we roll out. I think the cost of smartphone needs to go lower to reduce the barriers to entry. And then with smartphone, then you can provide the new products and services and better customer experience rather than the standard USSD or the SIM toolkit menu. I think working with the regulator is a big thing. I think Kenya's success is largely also attributed to the regulator, and it's really important that as an industry, we work very closely with the regulator. As I said, they should know what you're going to launch in the next 12 months. And the reason for that is while we try and impact society, they try and protect society and ensure there's no systemic risk. So it's a great partnership that you can do with the regulator, and we've seen that successful in different markets, and it's something that we will continue to do. I think touching on what Jaine mentioned in terms of the new products, new technologies and emerging technology, it was great yesterday listening to the central bank governor talk about next generation platforms, because as technology becomes, cloud native, there's a lot of AI, machine learning, new technology in cybersecurity. How do we ensure that this is available across markets? And as Jaine said, it's built once, deployed enterprise. You just cannot do it now and 50 markets and deploy infrastructure in all markets. It's not sustainable. It's not cost effective. We see that with big tech, across the world. They don't deploy in 200 countries infrastructure. So I think it's really important that across the African continent, we look at how to embrace these new technologies to lower the cost of providing services. I think the last bit is the ecosystem and the partnerships. We need to really open our systems and encourage partnerships, encourage players such as Sandra team to be able to innovate around our platform. So we are very looking towards ensuring that we have open APIs and so on that really drive inclusivity as well as the future of digital payments in Africa. Thank you.
Thank you, Sitoyo. And last but not least, Sandra Yao is the Senior Vice President Africa at Thunes. With 15 plus years of experience in the payment industry in Africa, Sandra is extremely passionate about working with industry leaders to continue shaping the payments industry into a more inclusive ecosystem in Africa, which is really what Sitoyo just spoke about. So Sandra, how has Thunes' approach been unique in really trying to solve the challenges that we're talking about in the future of banking and payments today?
Thanks, Tamara, for the question. Hi, everyone. It's a pleasure to be here with Sitoyo and Jaine. And thanks to the Central Bank of Kenya for the invitation as well. As Thunes, we empower businesses and their customers around the world to participate in the global economy by making cross-border payments faster, transparent, and much more affordable. Payments is really an integral part of our lives. It is really not a luxury, but a necessity. We are constantly making payments. We buy our coffee, we go to supermarkets, we pay our school fees, and Thunes, we are here to make payments process to be more seamless, painless, and frictionless. Now, how does that make us really different? I would say two major things, really. We have always been focusing on creating a global interoperable network. Currently, we cover about 110 plus countries, and in Africa alone, we cover 33 countries. That's our platform is secure and providing the highest standard of quality of service. Second thing is, it's not just our business that is really global. Our people are as well. We have about 35 different nationalities across 5 continents. We are global, yet very local. Our team is very diverse, creative, and empowered. I think Jaine mentioned about her clientele average age is 35. I think our team's average age is 35, which we have a lot of young people, and some of them are 20-year-olds and very innovative. So we are focused by providing local expertise by working closely with our partners on ground to ensure their growth and their needs are met. Thank you, Tamara.
Thank you, Sandra. And it's hard to believe that it's been more than 2 years since many of us were together at the inaugural Afro-Asia FinTech Festival, which brought people from all over the continent and from really all over the world to discuss the importance of FinTech and the future of payments and banking. And I think the Central Bank of Kenya and Kenya as a country has been a real leader in this space in innovating and finding new solutions that really work for the youth and the women and entrepreneurs and all the different market segments that we're going to be talking about today. But as I think back to that time, not only the Afro-Asia FinTech Fest, but also the Singapore FinTech Festival, where Kenya went and really presented what it had to share with the rest of the world. We've come a long way since then. And a big part of the journey over these 2+ years has been this global pandemic. And as we've already discussed a bit, COVID-19 really did slow down the movement of people and goods. But as Sandra said, it may not have necessarily slowed down the movement of money. And so how do each of you think about how this global pandemic has changed the way we move money, the way we deliver banking and payment services, and how are these changes going to continue into the future? I'll let you unmute to decide who goes first.
Well, I'm happy to go first. Very great question, Tamara. I think we have, as a company, as Thunes, we have always been focusing on digital payments solutions, even before the pandemic. 60% of our payments go into e-wallets like M-Pesa. The pandemic has only accelerated the digital adoption across the globe. I'm sure Jaine has seen it, M-Pesa has seen it, we have seen it. Right, most of the incumbent providers have begun a very strong focus on digital channels, and most likely this shift is here to stay. I think during the past 2 years, the most common statement is "you're on mute," because we are all on Zoom, on Teams, on Google Hangouts having meetings. The movement of people has maybe slowed down, but the business is not, and the economy is really not slowing down, and people are sending more money back home. I think one of our top customer, Remitly, a pure digital MTO, they have seen their shares rise by 13% on the first day of them going IPO, and its market value reached $7.8 billion, just from $1.5 billion the year before. I think, again, digital transformation, digital focus is the future, and we really need to make sure that we are building platforms and networks to accommodate the needs. The speed of internet is absolutely important. Access to smartphone, as Sitoyo mentioned earlier, is, continue to be a major drive for people to adapt this new technology and new services. Thank you.
Great.
The one thing you must say about Kenyans is that we're very resilient. Yes, COVID came, shops were closed, operating hours for banks changed, but that didn't change business. We quickly moved on to the internet. So you found a lot of people who maybe were not selling digitally, suddenly moved to selling digitally. So you had a lot more people selling their products on Facebook, on Instagram, and all those spaces. And obviously that is followed by money. As a bank, I did mention that we had a digital bank. We have a digital bank rather. And we've seen about 95% of our customers acquisition coming through this platform, which means people don't have to go to the bank anymore to fill out forms. We have over 60% of our wealth management products, and a lot of this is insurance, travel insurance, house insurance, health insurance, online bonds and mutual funds. A lot of that moved online, and we are seeing 60% of our transactions happening in that space. And businesses are also not being left behind. We have our straight to bank system that we use for corporates. And again, a lot of our transactions, it's grown on those spaces. So what we found is that, yes, COVID came, yes, COVID stopped people moving around, but we then moved from the physical streets to the digital streets. But like Sandra says, and then Sitoyo mentioned it earlier, we do have to deal with the issue around access to internet, or good internet, if I can put it that way, and affordable internet, as well as having the smartphones or having the laptops, because we did see a crunch in that space. A lot of our global suppliers suddenly, you couldn't get laptops anymore, and so you sort of had to work with what you had. So those are some of the barriers and things that we need to address just to make sure that we are able to continue on these streets. And yes, we are not going back to the way things were before. I see a shift, and I don't see us going backwards. Like I said, we're dealing with digital natives. A lot of population here, is in the youth, and they're not going to go back to a bank and have to fill out a form, to do something. We've changed. We've shifted.
Sitoyo?
Just picking up, I think for us, we looked at it in, three different ways. We echoing what the other panelists have said, COVID has been the biggest accelerant for digital services, especially digital payments, as businesses change. At the beginning, we looked at it from three different levels. One was a response stage. This is where we worked with, the regulators such as Central Bank of Kenya and other central banks across our footprint in lowering transaction fees to be able to cushion customers during this period of time. We also worked with governments to disburse funds to the vulnerable within our society. Things like Kazim Tani in Kenya, as well as in areas such as in Mozambique, we actually did disburse government funds to the vulnerable. We also now, on the response stage, as the economy started to open up, we started looking at how do we support SMEs and micro SMEs. To what Jaine said, how do businesses start opening up and getting, take advantage of the opportunities as people go digital. So we worked on, digital onboarding, self-onboarding for merchants, and today over 30% of our merchants are actually self-onboarding. And then we launched what we call the business app or the business super app for SMEs, and this enabled them for the first time to have remote payments. They can see what's happening in the stores. They can make disbursements remotely while working from home and collecting money from the various digital channels that they were selling. On the third phase, what we are seeing now is the reimagine phase. This is a permanent change that we are seeing in terms of how businesses are operating, and especially moving stores that were physical and giving them an access to virtual stores. And then Jaine mentioned this. So somebody who's in Nairobi now can actually sell, to the whole entire country, in this new e-commerce space. So we are providing them with those kind of channels that businesses can now grow beyond just their local footprint. And we'll be seeing a lot of products and services emerge. Today, just to give you an example of what Jaine said, Jaine could have a wealth management solution, and you've got a great product in your app, but we could pick that and put it within the M-Pesa, so for example, super app, and then now 28 million people in Kenya can have access to those kind of services. So it has radically changed what we call the target addressable market. So somebody who's small could suddenly has 28 to 50 million customers, as a marketplace. So we're seeing this trend permanent, and we'll be looking at new products and services that take advantage of the changes in the way the society is going. Thank you, Tamara.
Thanks, Sitoyo. So,
there's something, Tamara, if I can add.
Please.
There's something Sitoyo mentioned about the regulators and the government, and those are key enablers for us as organizations to thrive. So we do have to work with our regulators. We do have to, and the government, to have an enabling environment that will allow for this kind of space. Yeah, because if we don't get that, then it sort of doesn't quite work the way we'd expect it to work. And obviously, another thing he did mention about the digital marketplace and so on, we have to work together. StanChat, Thunes, M-Pesa, Safaricom, and every other partner fintech that's out there, because we can't go it alone.
No, it's a really good point, Jaine. And I do think that, regulators need to not only think about the traditional parts of the payments, and I really like the way, Sitoyo, you talked about protecting and creating impact, but things like, for example, you talked about digital onboarding of your merchants. If you need to have a know your customer way that can be trusted digitally, and is accepted by the regulator in order to open accounts digitally. And that helps those digital natives. When the very first kind of mobile linked bank accounts were rolled out, there was a requirement for, still having the physical signature. This is many years ago, but we've come a long way since then. And so I think it's important that regulators protect, but also enable the next generation of banking and payment so that we can all share in this prosperity and this inclusive economy. So that brings me to the next question, which I shared with you in advance. And I like to think of the digital economy being inevitable. And I think if anything, COVID-19 has only accelerated that path towards a digital economy in countries, especially like Kenya. However, the inclusivity of that digital economy is not inevitable. And I think we run the risk of those who are digital natives, those who do have access to those digital tools, being the ones who are able to achieve and really seize the rewards from that digital economy, while we risk others being left behind. So as you think about this potential digital divide or the risk of leaving people behind, what do you see as the barriers to a truly inclusive digital economy, and what can we be doing to bring more of Kenya, more of people across Africa and the world into this inclusive digital economy? Sitoyo, do you want to start?
Yeah, thanks, Tamara. I think the digital divide is, it's such an important topic. Whether it's, people with smartphone and non-smartphone, and that divide, people have access to the internet and those who don't have access to the internet. But I think for us, first of all, as a purpose-led company, we start with just how the society, uses our products and services. As an example, in Kenya, today we have 1.4 million visually impaired customers who own M-Pesa. So how do we provide, products and services for them that are able to use them without necessarily compromising on giving somebody else their PIN number? So, advent of, using new technologies such as dot braille watches and tablets, which we've rolled out, voice recognition software for them to transact, and so on. So I think we need to make sure that all, financial services are inclusive. I think the opening up of our platforms it will enable inclusivity. When we have these open APIs, today we have 42,000 developers within our ecosystem. We're targeted to go to 100,000, which means these 100,000 people are trying to develop products and services to, in different areas. And we've seen companies such as, M-Copper, Solar use it, M-Gas recently for gas. Safe gas in the country that it's, you pay as you consume via M-Pesa, and we're seeing more and more the fintech side of it coming on board with products and services that actually drive or reduce the digital or reduce that barrier in terms of the digital divide. Thank you.
Sandra?
Yeah, sure. Thanks, Tamara. I think just to build on what Sitoyo mentioned, I think, again, accessibility remains a very key challenge. Access to smartphones, to smart devices, access to internet. I think we have all seen during COVID time. I mean, private school students continue with online schools, but a lot of the public students have been stranded. They are left at home. There's no internet, there's no smart device. They cannot continue with education. So these children would have lost 1 to 2 years. So how do we make this access more widely available, accessible, and affordable? I think the second thing is really when we talk about movement of payments, cost to transact, whether domestically or globally. I think, of course, Sitoyo mentioned they have worked with regulator to reduce, part of the transaction cost, which is great, amazing. And when we look at cross-border payments, cost, especially in sub-Saharan Africa, is the most expensive, as high as up to 17%, which is crazy. So I think, again, talking about collaboration, we want to work together to build solutions to bring down the barriers. Partnerships works, collaboration with the central banks, that they have to allow the environment to allow fintechs to play in this space. I mean, to give you an example, that we are working with one of our partners, a big bank in Malawi, FDH Bank. Their customers can go to the bank and send transactions to all the mobile wallets in Tanzania real time, which was not even possible before. So, and we work closely with our partner banks, mobile wallets, to reduce the cost of sending money and to hit the target of SDG goals as low as 3%. I think some of our partners are really championing on that. I think the other part that I want to talk about is really when we talk about inclusivity is gender gap, especially in this banking, payments, and fintech space. I mean, today's panel is one of the greatest that I have attended. For the first time, Mr. Sitoyo perhaps is the minority here. We have a lot of ladies on the panel, happy to see that. But I think we still have a long way to go when it comes to, gender gap. I think women are massively underrepresented. Report shows that women in fintech industry, that only 26% of the executive members in the banking sector were women, and this figure drops to 19% in Africa. I'm very happy to see Jaine, is paving the way, continue to do the good job. And especially in the tech companies, even worse, and women only make up to 14% in the executive committee. So I would like to see more and more inclusive and to bridge the gender gap.
Thanks, Sandra. Jaine, over to you.
Yeah, sure. Both Sandra and Sitoyo have touched on some of the barriers, so I wouldn't delve too much on that. What I'll touch on is what we're doing as an organization. And one of our commitments within Standard Chartered is to improve the lives of 1 billion people and their communities across the globe. Locally, we have the same goal in Kenya. So what we're looking at is supplier diversity. Let's get more women suppliers on board, more youth suppliers on board, so that we can make it easier, give the opportunity that is there to others to help bridge that gap, if I can call it that. Specifically, we have a program with the young ladies. It's a program called Goal that runs across the group. But in Kenya, one of the things that we've discovered, or one of the things that we're doing with these ladies, is trying to help them improve their businesses. We've talked about how hard it is to have the smartphone, or how hard it is to get data, or, well, it's expensive for the kind of business they want to do. So we're setting up a computer lab for them, a small lab where the offices are. And we want to look at training them on how to sell digitally. It's a lot different when you have a shop and you can call people in as to when you have something on the screen. It's got to look appealing. You've got to get a way of, getting people to buy your product. So that's one of the things we're trying to do, and obviously hope to scale that up. But that's where it starts. You've got to start somewhere. Try and get out there and bridge that gap. I mean, it's a big gap, but if you don't do anything, then it just always remains a gap. So how then do we go on to the next step, which is how do we make it more inclusive for people? I've talked about our goal to uplift 1 billion people across the globe. We have businesses in Kenya that shop in China or shop in India. We are in Kenya, we are in China, we're in India. We want to see how we can make it easier for us to bridge that gap. So I can have a group of suppliers in Kenya or vendors, and I can connect them to partners in India, China, or wherever it is in the world, and they can get access to good products, access to good financing, and they can bring in their products here. So we're looking at it from different angles as to how we then become a bit more inclusive as an organization. And hopefully we should see change in the years to come.
Well, thank you all. I think you've all raised many of the good barriers and shared many good ideas about how we can close that inclusivity gap and really bring more people into the digital economy and the opportunities that are there. One area that we haven't discussed very much so far is actually the connection between the physical and the digital. I've heard it called the phygital. But if we think about the access to cash in and cash out points, for example, in Kenya, the reach of mobile money and bank agents is quite wide, but there's still people who live a very, very long walk from those points. And so then it limits their ability to really fully seize the opportunities of using digital payments if there's not a way to get their cash in and out of the system. And so those are some of the things that we can be thinking about. The other thing I just wanted to bring up, I'm sure you're all familiar with the FinAccess research that the Central Bank of Kenya, Kenya National Bureau of Statistics, and FSD Kenya partner to deliver. And the research has recently been completed here in Kenya and hopefully will be launched publicly soon. But in the 2019 FinAccess data, we looked at what is driving exclusion in FinAccess. What is preventing people from either accessing or using financial services or using them to their greatest advantage? And we looked at even not necessarily people who were just excluded, but people who were underserved. And so we looked at farmers, for example, We looked at urban retail traders, and just some of the segments in the population who may have access but aren't fully using financial services, banking and payment really to their full. And youth, as you've said, Jaine, was one of those categories where youth, even though we think of them as being digital natives, sometimes it takes them a little while to actually enter the formal financial system after turning 18. And then with women in Kenya, we actually have one of the lower digital, gender gaps on financial access across the continent. But low is not good enough, as Sandra said. And I think there's a lot more to make sure that not only is that gender gap reduced, but that women are actually getting the valuable financial solutions that they need. Well, let me move to the next topic that we discussed already a little bit. Sitoyo mentioned M-Pesa and some of the gas partners that you're working with to reduce, to provide more green solutions. And concurrent to this event that we're having here in Kenya and the Singapore FinTech Fest, COP26 is happening in Glasgow. And so there's a global conversation around climate change and what the impact of climate change is for a country like Kenya, and how finance, banking and payments can play a role in reducing the impacts of climate change, helping to mitigate those risks, understand those risks, mitigate those risks, but also reduce future climate change. And so would love to hear how you see banking and payments playing a role in that. Jaine, do you want to start?
Sure, Tamara. One of the ambitions that the Standard Chartered Bank has is to be the most responsible and sustainable bank. And we're looking at generating income from sustainable finance. Our ambition is to achieve net zero carbon emission by 2030 in operations and increase our financing by 2050. One of the things we've done in Kenya, and this was last year, we had a partnership with Davis and Shetlev, and that was to help homes and families transition to clean water and clean power. And we will see a lot more of those kinds of partnerships in the years to come. Because of course, we really do need to save this environment, because but when you listen to what's happening with global warming today, I mean, almost every day there's something happening. Yesterday, I was reading about floods in Chennai. The other day there was fires. The other day there was all sorts of things happening. So we really need to take care of the environment that we live in. And as a responsible bank, we have made that commitment. This last weekend, we launched a partnership with Arboretum, and we've committed to plant 1 million trees in 3 years. So we will see a lot more of the things that are going to be happening, and the partnerships, and a lot of the partnerships actually that we're going to have as an organization as we achieve our goal of achieving net zero. We can't do it alone, obviously, so we have to work with partners. We do have what do you call it? Solar panels on our ATMs, especially our remote sites. And we are working with partners who are of like mind. Yeah, so it will be either partners to deliver or where we situate ourselves. We will work with people who are like-minded like ourselves, and just aim to giving us a more greener and more cleaner economy. So we will see a lot more green bonds, green trade finance, a lot of sustainable finance over the next couple of years coming from ourselves. And we're uniquely placed because we can help companies become more green, because obviously it takes financing. So we will work with companies as well who do want financing to change their operations.
Thanks, Jaine. Sandra?
Sure. I think for us, or at least for me, I think moving to digital and away from printing cash is definitely the future. I think a lot of central banks are looking at to issue e-currency. I mean, Nigeria led the way, Ghana is preparing it, and a few other countries. I think we all know COVID accelerated digital, adoption, and it's gonna be here to stay. So maybe just to share a bit of personal story. It doesn't help as a Chinese living in Kenya. In China, we pay everything with our phone. I mean, even the people who used to pickpocketing, they lost their jobs. No one has wallets anymore, right? And in Kenya, we pay everything with M-Pesa. So I went to Dubai for a trip, and I wanted to take my team out. I go there and we finish. I want to pay. I remove my phone. I don't have my wallet. I don't have my card. I could not pay because I thought in my mind, I'm still in Kenya. I could pay from my M-Pesa wallet. So I think as individual, as company, we just need to be very deliberate and conscious that make payments digital as much as we can. I know that everyone says cash is still the king. So we all need to collaborate. We are fighting cash. We're not fighting each other. Collaboration and making sure that we are deliberate about digital payment, adoption is the way to go.
Thanks. Sitoyo.
I think great points by Jaine and Sandra. For us as a sustainable business, Safaricom, I think we're the first company to have gone, to release a sustainability report quite a few years back, and we're really, keen that we drive our business in a sustainable manner. When you're looking at, similar to what Jaine talked about, whether the ATM using solar, we're looking at for our thousands of sites across the country, how do we put them on cleaner energy, whether it's wind or solar powered for our sites. I think the part on e-commerce and travel is really key for now, an SME to be able to buy products and services, let's say, for example, from China. China is still closed, but that does not stop businesses from ordering, whether through AliExpress. We've just recently connected interoperability with Alipay wallets, so that means when it does open up, then you can be able to use M-Pesa sort of quote unquote in China, and so on, so that you avoid that part of traveling. I think interoperability will be key, whether it's with Thunes or Standard Chartered, to enable our partners, or customers travel. I think Sandra mentioned, her traveling to Dubai and not being able to use M-Pesa. I think that's something that's going to change through partnerships, whether it's partners such as Visa, enabling that part, or what we call M-Pesa Global, to it, so that if I go to London, I could be able to pay with M-Pesa, on the underground instead of using an Oyster card. And those are the that part of partnerships and ecosystem that we're looking at developing through interoperability to ensure that wherever you travel, then you're able to pay with whatever wallet that you do have. But I think the ability to embrace the new digital channels, as Jaine said, and then allowing somebody from the comfort of their phone to actually transact and do their business rather than take a plane and travel far and wide to make purchases. And I think we will be seeing a lot more of that. I mentioned earlier about the open APIs and enabling the fintech community to take advantage and roll out products and services that are sustainable. And we'll be looking at supporting those businesses in it. And two examples, that we've seen, young women, Sandra, fintechs. There's Lami and Quara, who won the first hackathon, the Afro Asia FinTech Festival, 2 years back, and you see their growth and how we, many partners are supporting them in the sustainable business. It is fantastic. Thank you, Tamara.
Thanks, Sitoyo. Well, we've had a very wide-ranging conversation, which I think is appropriate when you think about the future of banking and payments. I don't think any of us who, when we started our careers, would have seen where banking and payments would be now, and it's hard to predict where they're going to be in the next 5, 10, 15 years, but I've asked you to do it. So before we met, I asked you to make 2 predictions. One is a risk that may be bigger than we expect. We've talked about some of the risks and barriers already, but which risk do you think is really maybe being underappreciated in terms of the impact, outsized impact it could have on the future of banking and payments? And then on a more hopeful note, what is the one opportunity, the digital transformation, that you think could have the most impact to address some of the challenges that we've been discussing today? Who wants to go first?
I can go.
All right, Sitoyo, go for it.
I think for me, it will be cybersecurity will be the biggest, risk that we do face, and this is as we become more interoperable, how do you ensure that we protect the ecosystem across the multiple partners that we do have? How do you monitor that? Because I think without the system being safe and secure, then the trust will not be there for customers. So I see that cybersecurity, AML, and data protection as just one and the same in terms of them. I think from the exciting bit is the advent of super apps as a new emerging, big topic item. And as M-Pesa, we're a two-sided network, and we've got started the business super app and the consumer super app, and this enables us to play in a large ecosystem by being quote unquote the Google Play Store of Africa. So we'll be keenly looking at that development of super apps, and you're seeing that more and more being talked about. And this came from Southeast Asia, from partners such Grab and Alipay and WeChat, who actually innovated around this space. Thank you.
Jaine?
Sure. Thanks. Like Sitoyo, in my initial thoughts on the biggest risk was cybersecurity. And I had a conversation with my colleagues about it. And I said, guys, what do you think is the biggest risk that we have? And I said, I think it's cybersecurity. And one of my colleagues says, yes, it is, but have we thought about data sovereignty? Because we all move into the cloud, and the cloud is good, don't get me wrong, but we are moving our data out of our countries and into other countries in a large scale. So then that becomes a risk at some point. Will our data be subject to somebody else's laws and regulations which are not similar to ours? So that does become a risk that sits at the back of our minds as we get into this digital journey where we move everything to the cloud and to different countries across the world. But of course, it's not always doom and gloom. There is a bright side of what's happening in the technology space. And for me, I think one of the biggest things would be machine learning and deep learning. Today, we don't always have a 360 view of our clients. And once we do, I think it'll open up the world to so much more, because then we become a lot more intuitive on what we offer our clients, because then you can see everything they do. Today, as a bank, you probably only see what I pay through the bank. Sitoyo sees what I pay through M-Pesa, only doesn't see what I pay through the bank. If I'm using Thunes, they will only see what I transfer on mobile money. But imagine if you could see all the three spaces in which I operate. Then you can give me the right kind of products. Where am I going? What am I doing? And then that would make it so much better, because then in this digital space and in this world that we live in, it'll make it so much easier if I knew my clientele. Who are they? Where are they? Where are they transacting? What are they doing? What are their interests? Then I can curate a product that works for them. So for me, I think that's the big thing. Yeah.
Yeah, no, those are important risks and opportunities, Jaine. And I think, as we talked about earlier, the risk of, for those who are not yet included, their digital footprint just isn't as 360 as that, right? And so how do we capture some of that data that isn't yet digital to ensure people, again, aren't left further behind? And how do we also make sure that we're protecting that digital footprint so that people are not being taken advantage of? And I think the data protection laws and those kinds of things are important, but it's also important to enable choice, so that not only can that as a consumer, my data belongs to me, and I can port that data to whichever service providers I'd like to seek services from. Sandra, what are your predictions?
I think I will not touch the points where Jaine and Sitoyo have mentioned, because those are indeed very important risks that we need to look at. I think sustainability is something that for me is very key. The rise of the technology innovation has added a lot more complexity and new dimensions into the market. The combination of financial products and services and technology is seen in different forms, be automated advice, use of AI, ability to conduct payments through electronic means, and use of blockchain technology. And then, right now what the hot topic is buy now, pay later. I think, are these sustainable? Are we teaching people with responsible behaviors? Do we provide enough financial educations to know, do they know what they are getting into when they get into this type of services? So I think something that we need to think about it long term, especially when it comes to young people who are eager to get into, I want to buy a new TV, I want to buy a new car. And since access has been reduced, I can easily get it, but do I have enough responsibility to know that in 5 years I can still afford and get a mortgage? I think the opportunity I see is, again, we talk about interoperability. When I see the world is, I think we need to have one connected world. Today we are traveling. I mean, before COVID, we were traveling a lot, and now we're traveling less. And I think, we'll begin traveling again. How can we make sure that wherever you go, you can pay with your home wallet card, whatever financial means that you have. You don't have to switch to the local, or you don't have to now go to the ATM with your cash and make a payment. So I think the bottom line is that I would like to pay for a meal in Singapore with my M-Pesa, or I want to go to Ghana and pay with my Alipay wallet. So interoperability, I think, is the future when it comes to payments and banking for me. Thank you.
Thanks, Sandra. Now, I think you bring up a very important point about the financial solutions being fit for purpose and fit for people's realities. And I think one of the frameworks that we found to be really helpful is looking at both financial health and financial needs, and really seeing, are the banking and payment solutions that are out there helping people manage day to day, deal with risk, and invest in the future. And I think, what you're talking about with, for example, responsible use of credit, how does the credit market infrastructure really enable good tracking of repayments and helping lenders to make responsible offers of credit and manage those offers of credit responsibly, but also helping consumers understand, have the transparency they need to be able to compare offers and understand pricing and conditions and all of that. Very important parts. Well, before we wrap up, would anybody else like to make any connections between the predictions or reflections on our conversation?
From my side would be great.
Maybe if I...
Go on, Jaine. Go on, Jaine.
Ladies first. Jaine.
No, I think in deference of the only gentleman in the room, I will allow him to speak first.
Oh, okay, great. Sitoyo, you're honored.
No, I think for me is there've been great discussion points and great risks as well as the opportunities. I think for me, Tamara, it'll be great to catch up next year's session and see what has really come out. But I think key for all of us is working together in this digital ecosystem and partnering and not seeing each other as competitors and ensuring that we have a safe, secure ecosystem.
Yeah, good point. Jaine?
Thanks, Tamara. I was actually going to say what Sitoyo said. One of the things that has resonated pretty much throughout this conversation is that we have to work together. So interoperability, partnerships, it's key, because at the end of the day, you can only go so far by yourself, but you go a lot further when you work with somebody else. So I do look forward to having further conversations with yourself, with Sandra, with Sitoyo. Let's see what we can do. Let's work together and make a huge improvement for the country and the economy.
Agreed. Anything else, Sandra?
Just to echo what Jaine and Sitoyo have said, I think great panel, great discussion. We do look forward. Hopefully next year we can meet physically together and see what we have done so far. I think collaboration is the way to go. We all agree on that. How do we be more conscious and more deliberate and make it happen? Let's not reinvent the wheel. Let's work together and make the ecosystem bigger.
Absolutely, we can grow the pie, and that's good for Kenya's people, Kenya's economy, and our relationships with those outside of Kenya. So thank you to these fantastic panelists. I've really enjoyed having this. I've almost felt like we were all having a cup of chai together. And I do look forward to being able to have these conversations, not just in panels, right, but in the day-to-day operations of implementing and rolling out this ecosystem that we've talked about. So thank you again to the Central Bank of Kenya for hosting this event, to the Singapore FinTech Festival for connecting and inviting the global community into that conversation, even though we can't travel as we have in the past. And thank you.
Thank you.
Bye.
Bye.